In 2009, Bitcoin was created to give you financial freedom, a way to escape a system built to keep you poor. But today, the very system it was meant to replace now owns it. See, BlackRock, the largest asset manager on Earth, now controls over 700,000 Bitcoin. Now that's more than most countries, and they're not alone. Real estate empires, billion-dollar funds, Ivy League universities, they're buying up the most finite asset in human history. And quietly, and while you're wondering if it's too late. See, here's the truth. Bitcoin was made for you. But the door is closing, and once it shuts, well, it's never opening again. So let me show you how they took it and how you can still claim your share before it's gone. See, Bitcoin wasn't created for Wall Street. It wasn't designed for billion-dollar hedge funds, real estate empires, or Ivy League endowments. See, Satoshi Nakamoto didn't write the white paper thinking about how BlackRock could accumulate 700,000 Bitcoin while you debate whether to skip your morning coffee. Now, Bitcoin was made for you. For the worker tired of inflation, eating their paycheck. For the entrepreneur trying to escape a system that taxes innovation and rewards speculation. And for the saver who watch their dollars buy less each and every year. But somewhere along the way, the game changed, and the people it was made for stopped paying attention, and just long enough for the giants to walk in and take it. See, right now, there's a silent transfer of wealth happening, and it makes the California gold rush look like a garage sale. Except this time, the gold is digital, finite, and global. And the rush isn't fueled by everyday dreamers with pickaxes, it's orchestrated by corporations, governments, and asset managers with trillion-dollar balance sheets. Now, we're talking about companies selling hundreds of millions in real estate, but not to reinvest in their industry, but to buy Bitcoin. Universities like Harvard, Yale, Brown, all holding Bitcoin in private wallets, and not just ETFs. Now, institutions treating it as a reserve asset, while retail investors scroll past the headlines thinking it's just crypto hype. See, Bitcoin is being absorbed by entities who have no intentions of ever selling it back to you. Now, they're not trading on emotion, they're executing on strategy. Now, BlackRock has over 700,000 Bitcoin, and Metaplanet is openly aiming for 210,000 Bitcoin. And here's the math that should keep you up at night. There are roughly 1 million Bitcoin left in liquid circulation. That's 1,000 companies buying 1,000 Bitcoin each, and the cupboard is bare. So think about that for a moment. 1 million Bitcoin might sound like a lot until you realize Apple could buy all of it with less than just 5% of their cash reserves. And until you realize global pension funds collectively manage over $50 trillion and could wipe out the remaining supply with a rounding error in their allocation models. And when that happens, you won't see a press release saying, "Sorry, retail investors, you missed your chance." You'll see a chart that never comes back down, and you'll watch the price go vertical. Now, not because of hype, but because the people who hold it don't need to sell. See, when Satoshi mined the first Bitcoin in 2009, the idea was radical. A peer-to-peer, censorship-resistant money that no government or corporation could control. and early adopters were coders, misfits, people who believed in a decentralized alternative to fiat currency. Now, they were the first ones to get it. But now, well, the people who get it wear suits and manage billions in other people's money. Now, they've read the same white paper, but they see Bitcoin not as a protest, they see it as a balance sheet weapon. They understand supply shock, they understand asymmetric bets, and they understand that if you corner the market of the most finite asset in human history, you don't just get rich, you get power. Now, the tragedy isn't that institutions are buying Bitcoin. In many ways, it actually validates that thesis. But Bitcoin has matured into a recognized store of value. Now, the tragedy is that most people watching this video still think they have unlimited time to decide whether Bitcoin is for them. See, this isn't a tech fad waiting for you to get around to it. This is a vanishing asset that is being redistributed into vaults. Vaults you will never have the keys to. And you're not just competing with your neighbour, you're competing with sovereign wealth funds and with trillion-dollar asset managers and with corporations willing to liquidate other assets just to accumulate more. See, if Bitcoin truly was made for you, the individual, the saver, the outsider, then the only way it stays yours is if you act like it. Now, not tomorrow, not after the next dip, but now. See, every headline about a company adding Bitcoin to their reserves isn't just bullish news. It's a warning label, and it says less is available for you. Because here's the reality. Once this supply shock fully hits, the average person won't be debating whether to buy Bitcoin. They'll be debating whether they can afford a fraction of one, and most won't. So here's the challenge. Stop thinking of Bitcoin as something you might try and start thinking of it as something you secure. And even if it's just enough to say, I own a piece of the last asset in history that can't be inflated away. Because in a world where BlackRock, Metaplanet, and hundreds of companies are quietly eating the pie, the only way to have a slice is to pick up your fork right now. Now, if you want to go deeper down the Bitcoin rabbit hole, then check out my ebook down below, because it's the wake-up call they never wanted you to read. Now, I do also have to chuck this disclaimer in here as well, and I highly suggest just pausing the video and having a little read. Now, if you've made it this far, and if you're looking for something else to watch, then click right here and have a watch of this.